Dropbox seems to be a huge topic, Paul. The comments are flying in about people's what they think in comparison to other competitors. So perhaps we can look at it. Dropbox.
Okay, let's look.
Go ahead, Paul.
So I want everybody to notice one thing about Dropbox here. Look at the chart here.
The ticker symbol is DBX. DBX Dropbox. Go ahead, Paul.
This is back in 2018, April of 2018, skyrocketed, and it fell back. Guys, look where it's at right now. It's at a level lower than April of 2018 when it went public. It's at what, $20-some a share?
27 right now.
27. It's still lower than when it went public. This is what I'm talking about, guys. Are you telling me Dropbox hasn't grown a ton? So look at this. Dropbox in April of 2017, let's look at its revenue.
There you go.
Look at the revenue from April 2017. Let's go quarterly. Let's even go to, let's see, hang on a second. Next period. April of 2017. June of 2017, they had $266 million in revenue. They now, last quarter, had 504.
Doubled.
They've almost doubled. And yet, look at the stock price. This is what I mean when I say, guys, the stock price doesn't necessarily match here. The stock price is lower than it was. Why? Because it was too expensive here. For those of you who don't believe, this is a company, if I told you right here, guys, the company's revenue is going to double in the next 3 years, what would you have said? Oh my God.
Rockets.
And then what happened? This is proof that it happens, guys. You can overpay for growth. At this point, actually, even better. It was July. June of 18, it doubled since then.
I hear you getting fired up, Paul, because this is, we rarely see this, is everyone wants to look at this huge climb without thinking about the possibility of what's happening afterwards and what you're paying for your going back to your growth.
By the way, we do see this often, but it's usually after the bubble bursts. This is one that was during the bubble rise. I'm surprised that Dropbox during this bubble has gone down. But it does happen.
This may seem as a good buying opportunity for a dummy like me, Paul, because the price is so low in comparison to its heights.
Correct.
Yeah, those heights may very well be overhyped, but it's interesting. You want to get into it with our 8 pillars?
Let's do it.
What is the market cap for Dropbox?
$9.2 billion with a PE that is negative because they have not made money yet. So we have 2 X's to start, negative profit margin and negative PE. X's, okay?
Double X.
Now, free cash flow, though, in the last year was $500 million. So they had a loss on the books of $256 million and free cash flow of $500 million. This is why I want to focus on free cash flow. No dividend, all the negative numbers. When you have a negative return, you have negative return on invested capital. So let's go on.
Revenue growth over the past 5 years, pillar number 3.
Well, we only have 4 full years of data, and it's a check mark. 1.1 billion to 1.9 billion. Check mark there.
How about profit growth?
Okay, profit growth. It's an X.
Uh-oh.
They went from losing 111 million to losing 256 million. That's another X there, okay? Shares outstanding.
Pillar number 5.
An X as well. 393 million up to 411 million. X as well. So we're not off to a good start here. We only have 1 check so far.
Yeah, you're right. That's the revenue growth. Current assets over current liabilities is pillar number 6 for Dropbox.
1.3 billion in cash. 1.03 billion in liabilities. That's a check mark there.
How about the free cash flow? Pillar number 7. You know, Paul, let me just pause real quick. If you're watching at home, this website is completely absurd, and it's ours, Paul. The ownership of the pride you must feel of making this, hiring people to do this. It looks incredible, and I forget that we made this.
We did make it. It's a very big compliment I get, and the funny part is, guys, this looks nothing like I want it to look either. Like this is going to evolve over time. This is what the investing in this software for yourself is. This is going to change so much over time. It's going to get better and better and better. You're crazy for not signing up. So,
free cash flow growth over the past 5 years.
So this is interesting, guys. They've had free cash flow every single year for the last since they went public. 246 to 492. Check mark there. So you're probably wondering, how do they have a loss with free cash flow? Got to go figure that out. You have to figure out why they had free cash, because over long periods of time, free cash flow and net income should equate to the same. And they're definitely far apart here. They've had free cash flow of 250, 330. I mean, this is over $1 billion easily. $1.3 billion in free cash flow, and they've had a loss of like $1 billion. So it's a very big wide spread. I don't know why, but that's part of the whole peeling back the layers.
The average is 350 for this, Paul. And some people said in the comments that it's projected. Now, you don't look, I never hear this word come out of your mouth, projected revenue, but they're saying free cash flow is targeted to be $1 billion in 3 years. But I mean, you never say that.
Well,
Eddie said this.
if you go look at projections over time, they tend to be very, very far off, especially years and years out. I'm actually surprised that revenue growth wasn't that. The thing that concerns me about Dropbox is we all worked from home and their revenue is only up 20% since last year. Shouldn't it be up way higher than that? From 2020 versus 2019 is only up 20%. Not even 20%. It's like 18%. For a company that big of a multiple, should it be a lot bigger multiple? I mean, I would buy this company, I hate to say it, I mean, $3 to $4 billion. I'm not impressed by this.
To your point of
so it's got to drop in half at least.
To your point of working from home and stuff, I think it might be that companies like Google and Microsoft, they sell you that entire bundle of services, and sharing and cloud sharing is one of them. This is just...
We had Dropbox and I dropped it for Google Drive.
Exactly, that's my point. But also like Microsoft, Microsoft, you get everything in one thing. With this, you're going to buy one specific thing. I mean, that's not very...
Is this an acquisition target? Yes. Is it going to be an acquisition target $9 billion? I don't know.
Probably not.
Maybe if somebody goes, listen, it's $500 million in free cash flow. It's 20 times free cash flow in the last year, and they're growing, we get incorporated. But to me, it's got to be somebody who needs that. Microsoft has OneDrive. Google has Google Drive. Apple's got iCloud. Who are the other big players out there then? Amazon?
Amazon has cloud services, and yeah, I mean, how are you going to compete?
I just look at it going, unless this company goes super, super cheap, I'm not an acquirer of them. I'm just not going to. Because how many users do they have?
I don't know.
This is where it involves, like, you want to look at user growth and all that stuff.
Benjamin said in 2020, their non-paid users went up almost 20%. Whatever that means.
Okay. What about, I'd want to compare that to Google Drive, iCloud, and those other ones too.
I'm with you. Like the whole Google platform, how I can make a document, make a sheet, and then share it in a drive with someone else. It's so different from Zoom. I'm not, what am I saying? Dropbox. In that, Dropbox, I simply just store old crap on.
Yep.
So this is interesting. Yeah, Salesforce just bought Slack. Maybe they'll look at Dropbox, Bogdan is saying. Yeah, interesting.
Nice thing is the infrastructure's there.
Mo, would you like to talk about trading for this company, Dropbox?
Sure, and I have the more detailed chart up right now because I want to show that they are currently above all four of their moving averages, and they have made a 52-week high. So let's go over to the long-term chart, and what does that mean? It means that we have a power stock. And this could be the start of a power stock. So this is the time that you want to get into a power stock, when it just starts making that new all-time high. So you are the one that collects maybe those 3 months of gains. So let's zoom in a little bit more. So right now, we're coming through the sweet spot. We are getting into that overbought range with just a few days of positive trend. No big deal. It's okay. If this thing does break out with a green candlestick like that tomorrow or Thursday or something, you can go ahead and get into this thing, and here's your power stock. I mean, for those of you that are asking me, you always want to buy power, and you're kind of buying at the end of power. This is power at the beginning. This could be a great one for you. Keep an eye on it. I would advise adding to it when you make a new all-time 52-week high.
All right, that's our take on Dropbox, Paul, wouldn't you say? Final take?
I'm not interested in Dropbox. I think the competition's too good and too prevalent. I'm avoiding Dropbox. I mean, the free cash flow is still expensive. I'm just not cool with it.
In your opinion, of course.
In my opinion.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.